All right, what's going on, everyone? How are we doing? It is our favorite time of the week. We're back with another live stream. We have a very jam-packed video today. To kick things off, we're going to talk about a certain stock in my portfolio that I paper-handed. I guess that's probably the best way to put it. And after that, we're going to talk about some live stream news. Going to get in some Q&A, hang out. But before we get to all that, here's to you guys. Got a little margarita in here, as per usual. So, I guess to kick things off, guys, first of all, hope you're having a good week, start to your week. But to kick things off, this video is about, I just want to fill you guys in on a move that I made in my portfolio the other day. I actually made this move on Thursday or Friday. I ended up selling out of just one of the positions in my portfolio, and I'll reveal which stock that is in just a minute. But before I get there, if you guys have any guesses, leave them in the live chat for me. But this I haven't really talked about it. I didn't mention it in the live or in the Discord. I didn't mention it in any videos that I was thinking about doing this. So it might seem like kind of a snap decision. But this sell was actually one that I've been thinking about for some time. Actually, on second thought, I did talk about it in the Discord a couple months ago. But anyway, enough rambling on my part, guys. Without further ado, the stock that I sold out of is, that's a drum roll in case you couldn't tell, AWR, American States Water Company. And I see Kevin Burgess in the live chat here. Kevin, I'm glad to see you in here because I think it was you and me that were talking about selling out of this company. This would have been, I think, a couple of months ago or a handful of months ago now, if I'm not mistaken. But yeah, guys, the stock that I sold out of was American States Water Company, and it really was not a big position in my portfolio. I only had about 10 shares of this stock, and I'm thinking maybe it was like one of the smallest positions in my portfolio. I don't even know if it was 1% of my overall portfolio. No, it had to have been. It probably was 2 or 3%, but really not a large position at all. And so I want to go through a few of the reasons that I decided to sell this stock. I mean, the very first one, guys, is within my portfolio, I realized there's other positions that offered more income or better growth opportunities. And so that's one of the reasons. And I'll reveal which stock or stocks I reinvested into from selling this position later on. But anyway, guys, I just felt there were better income opportunities to kick things off. And I mean, as you can see, American States Water has a 1.81% dividend yield with a 5-year growth rate that's not too bad, about 9%. And they are, believe it or not, despite what Seeking Alpha says here, they are a dividend king. They actually have, I believe, 67 years of consecutive dividend growth. So that was one thing working in their favor, and that was one of the things that made me want to buy into this company when I first did, was that they were a dividend king, and I'll touch more on that in a little bit. So that was really the biggest reason why. That was one of the biggest reasons why I wanted to sell out of this company. Another reason was just to consolidate some of the positions in my portfolio, just have less stocks to manage, have less stocks to worry about. That was something that I've been wanting to do for a while, but I guess have been a little afraid to pull the trigger. Afraid to paper hand, as they say, Fenders, aka Mr. Income. So yeah, it felt good to consolidate a little bit in my portfolio and get rid of at least one position. I don't know if I'll end up chopping any more off or not, but this was a good place to start, I think. And I will talk about, I know I mentioned this a second ago, I will talk about what I reinvested into in just a moment. Sorry, I'm looking at my notes over here. You know what, let's just get into that right now, because I think that's really going to help kind of tell the story a little bit here. So, guys, let me go back over here. Sorry about this, guys. I'm all over the place so far. I ended up just reinvesting all of the funds from the sale of this into Lowe's. I just it ended up being about $800, put it all into Lowe's, and that really gave me a big boost to my Lowe's position here. I'm now up to almost $2,000 invested in total into Lowe's, which is huge. I don't even think I was at $1,000 before this move. So that's why I did it, or that's where I put that money, excuse me. And what that did, I'll show you what it did to my portfolio in just a sec. But I think that unveiling that will really kind of explain why I think this was a good move. So this is a stock comparison chart here on Seeking Alpha, and we're going to compare AWR and Lowe's right here. But scrolling down, guys, there's just all across the board, it seemed like a better move. Not only in terms of overall return, I mean, we can see across the last 10 years, Lowe's is just blowing AWR out of the water as far as share price and dividend returns go. Not only that, but, I mentioned higher income opportunities, higher growth opportunities earlier. I mean, that definitely is coming from this move right here. Lowe's has a higher starting yield by about 0.3%, 0.35%. And the payout ratio is a lot lower as well. The much higher dividend growth rate, right, by like twice as much. And then, very similar years of consecutive dividend growth, AWR with 67, Lowe's 58. They're both dividend kings. So, kind of a lateral move there. But even so, Lowe's is a more attractively valued company at this point. They have a much lower PE by over half. Price to cash flow is much lower as well compared to AWR. So that's looking good too. And then I'm just kind of going through this as we're seeing this as we're going through it. But revenue growth, profit growth seems to be better from Lowe's as well. Across a longer time period, 5 years, much more revenue growth than AWR. And that might be because AWR is more regulated than Lowe's. That's got to be one of the reasons. And it's kind of hard to compare these two stocks in a sense because they are in different sectors, completely different industries. So I guess we need to take that into account as we're explaining this stuff, right? But then even on the bottom line, looking at the net income, Lowe's has a big advantage over AWR. But then again, that could possibly be a result of the regulations as well. I'm not 100% sure. So, I guess all of this is to say, guys, all across the board, Lowe's is going to be a better position, more growth, more income right now and in the future compared to what I was getting with AWR. And truth be told, guys, I think I don't want to say I made a mistake buying AWR because it really seems to be a solid company, a solid utility company. I think it was a bit expensive when I bought it. I think that there's a couple different places that I went wrong with this investment. And I'd like to let you get your guys' thoughts on this as well as I'm explaining it. But I think I went wrong, number one, in buying it because I think my reasoning wasn't quite right. I think my mind was in the right place, just wanting to buy something stable, something reliable. But there didn't seem to be a lot of growth coming from AWR, at least compared to some of the other positions I could have invested in. We just saw that with Lowe's. And so I think that was one mistake on my end was buying something just for the sake of looking for something, secure. And I really liked the fact that it was a dividend king. And I bought this a year ago, just over a year ago. I started this position back in April 2021. So I didn't know hardly as much as I know now. Not saying that I know everything about investing because I still have so much to learn, but you can learn a lot in a year. So that was one mistake I think I made with this position. And also I really bought this stock just for the sake of diversification, and I'll elaborate on that a little bit more going back over to the screen. So if we go over to right here, my dividend portfolio tracking spreadsheet, and yeah, it looks like you guys can see that okay. So back in the day, guys, when I first got into this stuff, you guys might remember if you've been watching my videos for some time, how I would basically choose which stocks I was investing in was just based on how my portfolio was diversified. So I would always compare my actual allocations to my target allocations, right? And we can see, just looking at, comparing financials here, okay, actual allocations of financials about 5.75%, but I'm trying to get to 8%. So I would look at something like that and say, okay, I need to buy more financials. So let's go find a financial stock. When I was getting ready to buy, or when I bought AWR, that was kind of how I approached the purchase as well. I was just kind of using this company just to meet a target allocation, which is not really the right way to go about it at all, I think. And I didn't take its valuation into account as much as I probably should have, and as much as I would, if I was investing in it today. And so in a sense, I was just kind of buying the stock for the sake of diversification. And like I said, I think my head was in the right place. I chose a company that was a pretty decent company with a long dividend growth history, so it was reliable at that. But I think for me right now, there were and are better options, hence this move. Now that was kind of the first mistake with this investment. And also I made another pretty big mistake in selling it. Truth be told, and this is where, Kevin, I think this is when you and I were talking about it. Truth be told, I should have sold this company a long time ago. Going back over to Seeking Alpha right here. Oh, and by the way, guys, this right here, it's still in my, it's still showing it in my holdings on Seeking Alpha, but this is just like one dividend that I got paid recently and didn't get reinvested. So I sold out of this today, and that should be removed from the holdings tomorrow. But anyway, I should have sold this company a long time ago, guys. So we can see right here. Okay, actually, sorry, let's go here. So I sold it right about here, right at about 78, almost $79 per share, which, by the way, I haven't mentioned this so far, but that was right about where my average cost per share was. Actually, I think it was about 76, 77. So long story short, I ended up selling right about even, right about where my average share price was. Maybe just a couple cents higher, but basically about the same. So as far as capital appreciation goes, I didn't really see much in terms of that from this transaction. And what I was saying is I should have sold much earlier. I should have sold, back in January or even December of last year when it was over $100 per share. I remember, Kevin, I really think it was you and me talking about this, but I remember talking about this and being like, man, it's tempting. It's tempting to sell. It's up pretty high. What are you going to do? And this is a company that's already, fairly expensively priced. I mean, the PE ratio right now is sitting at 31.5. If we look at the valuation, Seeking Alpha gives them an F. And this is considerably higher than the rest of the sector, which is interesting to me. I wonder why this stock is trading so expensively. But anyway, that's the other mistake I made, and I know you can never, time the market. There's really no sense in trying to do that. But, I could have definitely played this one a lot better. So anyway, guys, that's pretty much what's been going on with AWR. Sold out of that bad boy, reinvested into Lowe's. I'm really happy with this transaction into Lowe's, actually. And just showing you guys kind of what it did for my portfolio. It's nothing too crazy. I mean, going back over to the screen here and jumping over to the dashboard. So prior to this transaction, guys, my annual dividend income was $1,640, like right about even. And just from making this trade, just contributing more to Lowe's, it bumped it up another $10 or so. So it gave me a little bit boost right now. But in the long run, I mean, it also increased my average dividend yield, and it's also going to increase my portfolio's overall annual dividend growth rate because Lowe's, as we saw, is a much higher dividend growth company than AWR is. So that's kind of my spiel with AWR, guys. Hopefully that makes sense. I'd actually be very curious to hear your guys' thoughts on this move. Do any of you guys have AWR in your portfolios? Have you bought it? Have you sold it? Let me know. Let me know what's going on with you guys in AWR in the live stream. Also, before we continue on, I think it's time to take another sip. And here's to you guys. For all you guys who are just now coming into the live stream or have been here for a few minutes and I haven't said hello, and thank you so much for joining us for another fun week, another fun live stream. These have been so much fun to do. I look forward to doing these more than I think I do recording actual videos. It's just so much fun. And a good excuse to make a margarita. So anyway, guys, that's all I really wanted to share as far as AWR goes. And now with that, my question for you guys is, what was the last stock that you sold out of your portfolio? Which stock did you most recently sell and why did you sell it? Let me know in the live chat right now. We'll talk about it in just a moment. So that's what's going on there. And then going back over to the screen, let's get into a couple other pieces of news. I was just reading some stuff on Seeking Alpha today, and there were a few articles that jumped out to me. The first one of which is coming from Apple. They had their Worldwide Developers Conference today, and the headline reads, "New MacBooks already seen as becoming a hit." So there's one little paragraph here that I'll read. So from the Worldwide Developers Conference, they say the most tangible items that Apple showed off were two new models of the MacBook Air and MacBook Pro laptops, which will be powered by Apple's new M2 processor. So for those of you who don't know, Apple fairly recently, definitely within the last year, I believe, came out with a new line of MacBooks or a new line of computers featuring their new chips, their new made in-house chips, the M1 chip, which is supposed to be really awesome. I haven't played with it myself, but I hear they're supposed to be great. So continuing on, the M2 is the latest of Apple's Apple Silicon chipsets, which it is rolling into all of its desktop and laptop Macs, which is great because I don't know if the iMacs prior to this did have the new M chips. Anyway, Apple touted the performance of the M2, that's a typo, been developed to run twice as fast, but at the same power level as the comparable PC chips. So that's super exciting. Always good to have a new hardware come out from Apple. I know personally I've considered, because I have my MacBook right here, which I'm on. I have an iMac over there. I've considered just trading in the iMac, trading in this MacBook, and getting a brand new one. I think that'd be a really good move. But maybe now just wait till the new ones come out and see how those are. So that's one piece of news I wanted to get into, guys. Good little piece of Apple news, pretty exciting. Maybe we'll see the stock price jump tomorrow from that. And then the next piece of news is actually from Starbucks. And this news is a couple days old. This is from Friday. But the headline reads, Starbucks rallies after reopening almost 600 stores in China. And for those of you who don't know, pretty recently, China started locking down again because of, I guess, a new, I don't know, strain or a new wave of COVID coming and affecting the population. So because of that, Starbucks closed a lot of their stores and they're just now beginning to reopen them. But this article reads, we will continue to reopen the rest of our store portfolio. With most of our stores providing mobile ordering only, we are also working with the local authorities to gradually resume indoor dining as soon as possible, read a company statement. Okay. That's great. And I don't know if you guys remember this, but Starbucks the other day on Friday jumped up about 4%. And I believe now, sorry, I keep going back and forth. I believe now Starbucks is above $80 per share again. Is that right? Let's see if this loads. Hey, don't do that. Let's go back here. Sorry, guys. Okay, going to Starbucks. Okay, so not quite $80 per share, but very close. I thought I saw them get to 80. Yeah, I think they were 80, at least for a few minutes today. But anyway, guys, Starbucks is starting to rally again. You know, we saw it very recently. I guess we saw it under $70 per share. So now it's making its way back up. This news is definitely going to help push the stock price back up even more. So guys, for those of you who've been Starbucks or been buying Starbucks recently, keep swooping it up before it's too late, before it climbs back to 100, which it may or may not do. We'll see what happens. But speaking of Starbucks, guys, actually, another really fun piece of news that I saw today. Starbucks has officially become my biggest position. Look at that. Number one, baby. So I think prior to this, I just recently put out like a top 5 biggest holdings video. I think it was number 3 or number 4, if I remember correctly. But now, guys, just with all the weekly contributions, it's jumped up to the number 1 spot, which is great. Prior to this, Realty Income was number 1, but I'm trying to get that out of my top 10, which will happen over time just from contributing to other positions. But I'm glad to see Starbucks in the number 1. Ideally, guys, I would like to have Procter & Gamble be in that number 1 position, and we'll see if it'll get there. I'm waiting for Procter & Gamble to come down more in share price before I contribute any more to it. But for now, I don't mind Starbucks, you know, being its placeholder. So you guys know me. I love my Starbucks. So anyway, guys, that's pretty much it as far as the other news I wanted to get into. Now, before we get into the Q&A and the hangout session of this video, which is my favorite part, there is official business that we do have to address, and that is about this live stream. This whole live stream thing and what's going on. So a couple things that I want to talk about as far as this live stream goes. I think we're all having so much fun with it that it needs to become like a weekly part of the content strategy. So moving forward, guys, I'll be doing this live stream every single week. Okay. Rain or shine. There might be some weeks, like if I'm on vacation or something and can't get to it, we won't have the live stream, but that's no big deal. But otherwise, guys, you can count on a live stream coming out for me every single week. And, we've historically been doing it every single Monday this last month now. But I was kind of talking to my girlfriend about this earlier today and just trying to, be strategic with all of this, and Ryan or shine. Just read that in the live chat. That was pretty good. I'm considering actually switching it to Friday, and I'll explain why briefly. So it's basically just based on my work schedule. I'm kind of thinking for me, it might be more beneficial to have this on Friday versus on Monday at the start of the week. Monday's kind of what I was talking about, kind of switching around my work schedule and making Monday more of a heavy work day for me, in which case it'd be harder to plan this live stream out. I'm not 100% sure if I'm going to keep it on Mondays or on Fridays. I'm just sharing with you guys kind of my thoughts on the subject for now. I'll keep you posted as I come up with something more concrete. And also, let me know your guys' feedback, because I want you guys to be available for this as well. So I'm sure it's going to be a mixed answer, but do Mondays work better for you guys or Fridays? Either way, I'm trying to shoot for this time right now, 5 p.m. So let me know in the live chat if you guys like Mondays or Fridays. Yeah, this is so good. You guys sipping on anything right now? Any cocktails going on? Okay, so that was one thing I wanted to share with the live stream. The next thing, guys, I think I've come up with a name. I've been working on like a little countdown timer kind of intro video for these live streams that I'll start playing, at the beginning of them. And I think I'm going to just call it, there's a fly. I think I'm just going to call it Dividend Happy Hour. I don't know if that's lame or not. You guys, you'll have to let me know when you see like the little intro thing I put together. I think it's pretty cool. But I think I'm going to call it Dividend Happy Hour. I was kind of playing around with some other things like Margarita Mondays, some other names right now, but I kind of like Dividend Happy Hour. I don't see myself changing that, but that's pretty much all I got for the live stream news. And it'll be kind of this format every single week. We'll do some sort of main topic, kind of like we did at the start of the video. Maybe we'll go through some other news, and then after that, we'll get into this part right now, the Q&A, the little hangout session. So that's pretty much it on my end. And I think now, guys, let's move on and get into the Q&A. So I'm going to scroll up and go through all of these comments right now. Okay, so we've regarding the guesses earlier as to what I sold, we've got someone guessed Chevron, guessed Main Street Capital Corporation, guessed Snap-on. No, man, I wouldn't sell Snap-on. I love Snap-on. Let's see here. Let's keep going. Let's find our first question. Oh, I didn't mention this, but maybe I did. What was your cost basis on AWR? So I believe it was right around between $76 and $77. I ended up selling right above my cost basis, like a couple cents, like nothing at all. So I hardly made any sort of gain on AWR. Okay, Mr. Income Fender said, good switch in my opinion. Thanks, man. I appreciate that. Okay, so Painting the Right Way wants to know, this is a good one. How do y'all feel about T-Row price? So let's go over to the screen again and take a look at T-Row real quick. Plug that in there. Okay, so T. Rowe Price, guys, is an asset management company or investment manager, and they've been at a very steep discount for some time. I feel like every video, every time I pop in the Discord, someone's talking about T. Rowe Price. Every time I ask, like, what did you buy this week or whatever, T. Rowe is very commonly on that list, and for good reason. Right now, it's just so cheap, down 35% year to date, down about the same amount just for the last year. And their PE ratio is very close to double or single digits, 12.01. Not only that, but this company, I thought they were a dividend king, but I guess not. 36 years of consecutive dividend growth, not too shabby, almost a 4% yield, which is great. If they keep going at the rate they've been going, they'll be at that 4% yield. Super low payout ratio, and then, a very nice high 5-year growth rate. Now, as far as what I think about T. Rowe as a company, honestly, I don't know too much about it. I think I've made a couple videos on it. But I do know in times like this, when stocks are performing pretty bad, and also with fears of a recession, companies like this tend to not perform as well because their assets under management decrease quite a bit, just from the prices and stocks dropping, and also people maybe getting afraid and removing their money from the market. So that is one possible headwind in this sort of market environment. But over the long term, T. Rowe's a pretty great company. I think they've been around for a long time. Let me actually go back over here and see. They've been around since 1937, so they've seen some things. T. Rowe's a good company overall, though. I know one of their competitors, a lot of other people, if they don't invest in T. Rowe, they invest in Franklin Resources, I think the company is called, ticker symbol BEN, B-E-N. So regarding AWR, again, Suzuki Man says, I think AWR would be a good way to soften the blow when the market is down. And that's true. That was one of the reasons I was kind of hesitant to sell out of AWR, to be honest with you. And I'm glad you brought this up, because it being a utility company, it's a very stable company and would be good in more volatile market environments like the one we're in right now. But at the same time, I've got tons of other companies in my portfolio that can, help ease the blow. And at the same time, I can take on more risk just at the stage of investing that I'm in. And so ultimately, that's why I felt pretty good about selling the stock. And I reinvested into Lowe's. I feel like that's a pretty good, I don't know, the share price might move when the market keeps dropping, but overall, I think it's a really strong company. So, I don't mind putting more money into it. Okay, let's keep going. And also, if you guys are just now joining this live stream, thank you, or have been here for a few minutes. Thank you guys so much for watching. And for those of you who have been here from the beginning, thank you so much for hanging out with me tonight. This has been a lot of fun so far. Let's see. Jacob said, I sold my utility companies about a month or two ago. I think this is a good switch. Yeah, I remember you doing that, man. And I don't remember exactly what you reinvested into, but I remember us talking about this. And I thought about you too as I was making this decision. I thought, what would Jacob do? I bet Jacob would sell out of AWR. And so that's that's one of the reasons I sold it too. I'm just messing with you, man. But okay, let's keep going. Oh, no way. Cameron, bro, I literally just sold it today. Dude, great minds, man. Great minds. Cameron, let me know in the live chat if you're still here. Why did you sell it? What made you want to sell out of AWR? Okay. right here, Painting the Right Way, says, I'm only 3 months into my investing journey. Hey, man, good for you. Congratulations on getting started. That's incredible. And if if you're still here watching, I want to know in the live chat what made you start investing in dividend stocks. Kevin right here says, really appreciate you being so transparent. It is really helpful for all of us to hear and learn from each other. Yeah, thanks, Kevin. At this, obviously you're someone I look up to a lot with this dividend investing stuff. You've definitely helped point me in the right direction, and I learn a lot from you. I know you know that. And I probably should stop saying it because I don't want you to get a big head or anything. But, I've got nothing to hide here, guys. And I know I've said this before, but being able to share what I'm doing, and hopefully, number one, it inspires you guys to take action who are thinking about getting into the market or are just starting. Hopefully, it can inspire you guys to keep investing and keep doing your thing, because it can really make a big difference. And also at the same time, I get a lot from sharing this because I'm able to get feedback from many of you guys who know more about this stuff than I do. I've only been doing this for a couple of years now, and some of you guys have been doing this for decades. So it's really helpful to just have other opinions, other ears to bend about this stuff who can help point you in the right direction. Let's see. Let's keep going. Harris, my man. In regards to live streaming versus recording videos, probably more fun without the editing work that goes into the regular videos. Yeah, that's definitely one of the reasons, but I like doing this. I like being able to see your guys' comments in the live chat and being able to respond to them in real time. It really is almost like we're hanging out, just having a beer, having a margarita together on a Monday afternoon. So, this has been a lot of fun. I'm really glad to have started doing this live stream thing. And then Shamir, always razzing me. Well, no, he's more so always razzes me about Campbell's Soup Company. But Shamir says he was going to guess I sold out of Starbucks. Heck no, man. Yeah, right. You know me better than that, Shamir. I'm not selling Starbucks. I'm not selling. I'm not leaving, but I'm not selling. Okay, so let's see here. So I see a few comments here that are in regards to like your guys' most recent sales, and I want to put those on the screen here. So Raheem says he sold Apple at $170-ish per share. Raheem, interesting move, man. Interesting move. And I sold out of Apple at one point early on in my investing career, and I got to say it wasn't something that I'm proud of today. So I'd be very curious to hear why you sold out of Apple. Interesting. And also what you reinvested if you put those funds elsewhere. So moving on, Camaray says, sold out of a few, all under 5%. DGRO, for example. Yeah. So DGRO, for those of you who don't know, let's go over to the screen, is an ETF. Actually, a pretty solid ETF. I covered it in a video not too long ago, talking about top 5 ETFs. I liked DGRO. Pretty solid top 10 holdings. Pfizer, Johnson & Johnson, Microsoft, JP Morgan, Apple. Look at all these guys. Pretty much all recognizable household names, and the dividend stats weren't too bad from what I remember either. So yeah, actually 2% forward yield, 10% growth, 7 years of consecutive dividend growth, which I think is kind of hard to come by with an ETF. Why did you sell out of that one, man? I'd be curious. Okay, comic book aesthete said, I sold Edit. It climbed too high and was expensive. It's crashed since then. Well, good for you, man. Good time to sell then. Gamma also sold out of Coca-Cola. Dude, no more KO, huh? Man. Okay, my man Zach Scott. I sold XYLD back in March. I haven't done much in the market the past 2 months. Yeah, man. I haven't seen you in the videos for a while. We haven't been DMing as much as usual. What made you want to sell XYLD? Okay, let's keep going. Let's find another question here. Well, actually, last one. Kevin, I sold out of Comcast last week. Ooh, man, why'd you sell out of Comcast? Interesting. You guys are making some sales. Painting the Right Way. Really don't like Starbucks' politics. Yeah, I understand that. Yeah, I don't know. We don't have to get into that, but whatever. Okay, let's keep going, guys. Sorry. What do you think of Apple stock? Love Apple stock. Apple is the most recent addition to my watch list. Let's actually take a look at Apple real quick, see what they've got going on today. So Apple is currently sitting at $146 per share, gained about 0.5% today. They're starting to make their way back up. They had a nice little rally, dipped into the 130s, but now they're climbing back up, almost touching 150 per share again. I would love it if Apple came down to like under 130 at least. I think that'd be awesome. I would definitely consider starting a position around that price, or really, think about it. And at the same time, going back to selling out of AWR, I mentioned consolidation being one of the reasons I decided to sell, which is true. I like having less stocks in my portfolio, less ones to manage. But at the same time, it does pave the way to add some more, I guess, higher conviction companies to my portfolio, like Apple. Target's another one on my list. Bank of America is another one as well. So yeah, I mean, obviously, I think Apple's a really, really good long-term company to own. I used to have it in my portfolio when I first started investing. It was one of the first stocks I bought. I think I bought it, my average cost per share was in the 80s. I've talked about this before. And I think I sold it around 120, so kind of a dumb move on my part. I think as far as investing mistakes go, that's one of my biggest ones. And at some point, I'll look forward to buying back into it at a decent price. So good question. Now, moving on. Congrats on reaching 9K. Thank you, man. Thank you. I'm almost there. I'm like technically 4 subscribers away from 9K, but a really cool milestone. Will be at 10K, hopefully in the next couple of months. And having said that, that none of this would be possible without you guys. And so thank you guys so much all for rocking with me on this YouTube journey so far. It's been a really fun. It's been about a year and 8 months now. We're coming up on 2 years. So thank you guys all for the support you showed me in my channel. It's starting this channel, I won't get too much into it. It really has been a life-changing thing, and I think just sticking with it for another couple of years, I think it will really prove to be one of those things that changes the trajectory of my life. I really look forward to hopefully being able to do this sometime, make content full time, and it'll happen someday. Just gotta stay consistent. Gotta keep doing this thing, and I'm so thankful to have your guys' support on this YouTube journey. It means a lot. So I know some of my videos are hits, some of them are misses. So either way, I appreciate you guys watching and commenting and showing some love. You guys are the best. So Ryan says here, Margarita Mondays are a go. Yeah, man. Yeah, they might be Margarita Fridays. I don't know. Mondays are eventually, okay. I might be getting ahead of myself here. Eventually, though, I'd love to do both. Honestly, I would love to someday, at some point, if and when I'm able to do this full time, I would love to do like a daily kind of live stream, like a Monday through Friday, or maybe like a Tuesday through Friday kind of thing. Kind of almost like, I don't want to say like Meet Kevin did or used to do or whatever, but I really like the whole, market open, market closing kind of thing. Just touching base. How did the portfolio do today? What's been going on? What's been going on with you guys? I think that's, I like the idea of doing that. Like I said, these live streams are a lot of fun. So, we'll see. We'll see how this channel continues to grow. Let's see. Okay. Talking about cocktails. Kama's got a rum on the rocks. Good for you, my friend. My friend Julius here has a Mexican mule. What is a Mexican mule, actually? Is it just a mule with tequila in it? That's kind of what it sounds like. Sounds pretty good, actually. Oh, shoot. I lost my place here. Sorry, guys. One sec. Let me find. Okay. So Miguel, my good buddy Miguel wants to know, Ryan, what's a good go-to tobacco stock? Any ideas? I've got a few ideas for you. So let's go back over to the screen, take a look at some tobacco stocks. So first and foremost, guys, my favorite is Altria Group. This is the one that I have in my portfolio. And I always refer to Altria Group as kind of like a triple threat as it pertains to the dividend. I mean, not only do they have the high dividend yield currently sitting at about 6.7%, but they have a pretty decent 5-year CAGR, 5-year growth rate, 8.25%, and they actually are a dividend king. This says 14 years of consecutive dividend growth, but I think that it's doing that because of when it's spun off from, or when it's spun off Philip Morris. I always get that confused, but I think technically Altria Group is a dividend king. So this is one that I really like. Talking about Philip Morris, that's another really great company, but in my opinion, the dividend stats aren't as good. 4.75% yield, which is still nice. Much lower growth rate than Altria Group, and then 13 years of consecutive dividend growth. Now, one aspect that Philip Morris does have an advantage over Altria Group is that Philip Morris has international exposure. I mean, we can see that in the company name right here, whereas Altria Group is just U.S. based. So that is one thing working in Philip Morris's favor. Now, another good tobacco stock to look out for is BTI, British American Tobacco, which is also an international company. And the stats here aren't too bad either. 6.71% yield. I mean, Altria's is still better. 5-year growth rate of 5.62%. Okay, not terrible. Altria is still better. And then a dividend growth history of 3 consecutive years. But looks like they've been paying consistently for, if this will load, 12 years. So that's not too bad. But yeah, I mean, as far as like dividend history, charts, guys, we've seen better. I mean, going back to Altria Groups, you'll see a lot more favorable chart from this company. I mean, look at that. That's more along the lines of what you want to see in a long-term investment, in my opinion. And now there's one more stock. I think it's UVV. Yeah, Universal Corporation. And this company is a little bit different. I believe that they have the land. Oh, processes. They grow the tobacco, right? Tobacco operations and ingredients. Okay. Yeah, so I think it actually grows the tobacco leaf and then sends to companies like Altria and Philip Morris to put in their products. Now, going over to their dividend, it's actually pretty decent. A 5% yield, is almost 8% growth rate, and they are a dividend king as well, 50 years of consecutive dividend growth. So that's pretty awesome. Now, overall, I mean, you've got some options there, but overall, I really like Altria Group. I think it's done really well for me. I'm up quite a bit in that position right now. Excuse me, guys. But yeah, you've definitely got some options as far as tobacco or sin stocks go. Now let's go. Keep going here. Yeah, some of you guys in the live chat are saying BTI is a good one. Altria Group's a good one. My boy Andy here says Dividend Power Hour for the name of this live stream. I like Dividend Happy Hour. I just think that's much more fitting because it kind of is. We do this for an hour. You know, it's happy hour. We a handful of us have our libations here. So. Libations, how do you pronounce that? Okay, so moving on. Harris wants to know, Ryan, when you hit the $2,000 a year dividend mark, you need to take a shot of 1940. All right. I don't know if it'll be 1942. It might be some like Trader Joe's tequila, which is what I drink usually, but I'll take a shot of it for you guys on the stream here. Okay, you guys got to keep me honest though. Like when I hit $2,000 in dividend income, you gotta remind me. But I'll do it for you. You might not like the look on my face when I do it, but you might regret asking me to do it. But I'll do it for you. I will do that. So, Ryan had actually a pretty good name. Dividends and drinks. Yeah. That's not bad, man. I see where you're going with that. MJ23 wants to know thoughts on UNH stock. And I got to say, off the top of my head, I'm not really familiar with this one, but let's go check it out. So UNH is United Health Group. Let me take a sip real quick, guys. Excuse me. So, man, I'm really babysitting this margarita. Spit all over my computer. So, I got to say, overall performance looked pretty good. In the last year, they're up 22%. Year to date, they're pretty flat, which is, more than we can say for the market as a whole. So they're outperforming the market year to date. The PE ratio is not too shabby, 22, but I wonder where that normally sits. So this is a little bit higher than the 5-year average by about 15%, and it's also about 15.5% higher than the sector median. Okay, so it does seem to be trading a little bit more expensively than usual. And I don't know what this company does exactly. A diversified healthcare company. Okay, won't get too much into that. Let's just take a look at the dividend stats. So pretty low starting yield, 1.19%, but they do have a nice low payout ratio of 30% with a very high 5-year growth rate of 18.3. And then not too bad dividend growth history, 12 consecutive years of growth with 19 years of consecutive payments. And you know what, this chart here looks pretty good. I wonder what the financials are looking like real quick, guys. So revenue, okay, so total revenue, we're seeing really steady, strong total revenue growth. Let's take a look at the profits, or at least earnings right here. So that's looking good. Net income's looking great. That bottom line's increasing quite a bit over time. So that's really good to see. Earnings per share going up. Man, this is actually looking pretty nice. Shares outstanding going down. What's the cash flow looking like? Cash flow situation here. I almost called it cash flow and cocktails too, but I don't know. I don't know. That might be a little too obvious. The levered free cash flow, the cash flow is growing pretty nice too. Looks like they had kind of a down year in 2021, but otherwise we're seeing some nice, a nice upward trend. I really like what I'm seeing from United Health Group so far. Let's see where cash is at. 25.5 billion in cash with, wow, okay. 22 billion in net debt. What was the cash flow again? Wow. I like this, actually. That looks pretty nice. You guys in the live chat, what do you think about UNH? But just at a glance, I'm liking what I'm seeing so far. That looks pretty solid. Okay. Fawad. How do you pronounce your name? What do you think of Apple stock? I'm sorry. I don't know how to pronounce your name. What do you think of Apple stock? So we went over that a few minutes ago. You might have joined after the fact, but love Apple. It's one of the stocks on my watch list, and I look forward to buying it someday. Oh, Kevin. Fuzzy Navel Friday. Yeah, I got one of those. Okay. Okay, Rick says, everyone is talking about T. Rowe Price. We need to look elsewhere. Yeah, I mean, like I said earlier, T. Rowe's been a very, very popular one. And Julia says T. Rowe is a value trap. So what makes you guys think it's a value trap? Exactly. I'd be curious. I think a lot of people, there's a lot of T. Rowe investors, I think, on this live stream. So let's see what you guys think there. Let's keep going down. Keep going. Okay, so my guy Joe here wants to know, what are your thoughts on WBA, Walgreens Boots Alliance, and 3M? So I don't know as much about Walgreens. I mean, I'm very familiar with the store, but it's the stock I'm not super familiar with. We'll take a quick look. And then we'll take a look at 3M as well, which is a company that I have in my portfolio. So Walgreens is down quite a bit year to date. Okay, down almost 20%. Nice single digit PE ratio. Let's see what the dividend's looking like. Okay, so nice high yield, about 4.5%. Low payout ratio, kind of low 5-year growth rate, and then 7 years of consecutive dividend growth. But they have 45 years of straight payments, which is good. And I do like this growth chart right here. That looks pretty solid. So I'm looking here to see where were they 7 years of growth, right? Okay, where was the, because this looks like they've just been growing it. Oops, excuse me. Oh, come on. I think my computer's freezing up a little bit, guys. Let me reload this page. Sorry about that. Guys. Okay, that's going to take a moment to load. My computer's glitching out. So we'll go back over here. Man, that's really glitching out. Anyway, Walgreens, from what I know, it's a pretty solid company. 3M, I really like 3M. I think right now their yield is still up in the 4%. You guys might know better than I will. Okay, the page reloaded, but we're already on 3M now. So, yeah, okay, we're looking at the share price chart, or the dividends. Yeah, so currently at a 4% dividend yield, payout ratio 60%. You know, this company, I think, historically has a higher payout ratio. There's not going to be as much growth coming from 3M, so I don't mind seeing this higher payout ratio right now. The 5-year growth rate's decent, about 5.4% with 63 years of consecutive dividend growth. That's awesome to see, obviously, you know, right up there with where AWR was. Now, one of the biggest headwinds with 3M right now, which I'm sure you know, a lot of you guys already know, is the this whole debacle with the headphones, right? Or the, not headphones, the earplugs. So that's something that could be affecting 3M. I think that's something that's been bringing their share price down. I mean, if we go back over to the screen real quick, I got to keep going back and forth. Going back over to the screen, they're down nearly 30% in the last year. Just year to date, they're down almost 18%. And I believe recently they came out with, they had some not so great news regarding the earplug lawsuits that they have. So they were ordered to pay about $77.5 million to a veteran in their latest earplug trial. But I feel like more recently there was something that came out, like a bigger, and maybe this was it. I thought there was just a bigger lawsuit that they had to pay out. I could be wrong on that though. I like 3M though. I think over the long term this isn't gonna affect them too terribly, but I could be wrong, but I hope I'm right. All right, so let's keep going down. Kyle, my man Kyle says, longtime watcher, love watching you in KB. Thank you so much, man. I really appreciate the support. Heavy metal taxes. I'm down 24% on Microsoft right now. I will not sell. Good for you, man. Good for you. In fact, you probably got to buy some more. Have you been buying more Microsoft lately? Oh, EC. I'm thinking about selling out of Verizon. No growth and lots of debt. You know, Verizon's kind of interesting. So definitely debt, right? Telecommunications companies like Verizon, like AT&T, they're really capital-intensive businesses, which is why you don't see a lot of competition. It takes a lot of money to get some skin in the game. But with that, I mean, the high debt just comes with the territory. You know, that's part of what they use to expand their infrastructure. For better or for worse, it is what it is. It's just a lot of money. And the thing too, like, you know, they're obviously very big companies too, which is why you're not seeing a whole lot more growth. But I will tell you what, these days, and my buddy Zaldath, I think, was the one who first kind of worded it like this from this is the first place I read it or saw it. You can look at telecommunication companies almost like utilities these days, because as I'm sure you can imagine, we're all pretty hooked on our phones. We're all pretty hooked on, having access to the internet at this point. And that's something that Verizon does. Like in really tough times, people are going to cut many other things before they cancel their phone bill or reduce their internet. That's kind of my thought. So although there's not much growth, although there's not much growth, although there is a fair amount of debt for these companies, I think they're still pretty stable, reliable investments. And I mean, if nothing else, they're going to continue to pay a decent amount of cash flow for years to come, at least hopefully. Because right now that is kind of the draw to companies like Verizon, like AT&T is having that high dividend and having that passive income. And they realize that. The company realizes that too. So I think they'd be putting themselves in a bad position, and they'd have a lot of people selling out if they were to ever cut their dividends or dramatically reduce them. But I don't know. AT&T recently had a reduction, so what am I saying here? Okay, so let's see here, guys. Let's find another question. You guys, tons of comments here in the live chat. That's awesome. Oh, okay, this is a really good question. Key says, will you take part in the Activision arbitrage play? I will not. No, I won't. I probably should. I think that's a really good move on Microsoft's part. In fact, my friend Suzuki Man 89 and myself, we were DMing about this on Instagram the other day. He was telling me more about this acquisition and how much he thinks it's going to be a really good move. And I agree. Activision's a huge gaming company with a lot of great titles, a lot of iconic titles. I think Call of Duty was one of them, right? And Apple or Microsoft being able to swoop that up is a pretty big deal. And one thing that he told me, and you guys might know more on this in the live chat, is Microsoft is starting to come out with, I don't know what it's called exactly, but it's almost like a Game Pass, like a subscription-based gaming service, almost like a Netflix for gaming. And I could have that a little bit wrong, but that's kind of what it sounded like when him and I were talking about it, which I think sounds really cool. I think that will have some really big potential. And I will say this, though. I am an Xbox guy. I'm not a big gamer these days, but when I was an Xbox guy over PlayStation guy. Okay, moving on. James wants to know, how many stocks are you holding? So with the sale of AWR, I think I now have 23, and I would not mind getting down to 20. At this point, I don't have any other stocks in my portfolio that I would consider selling unless I was to sell out of XYLD or JEPI. Or like some of the BDCs, Main Street Capital or ORCC. Those would probably be the first to go. But at this point in time, I don't see myself selling out of them. But I will say this. I've talked about some other stocks that are on my watch list, like Apple, like Target, like Bank of America. And if and when I decide to add those to my portfolio, I would consider selling out of some other positions like XYLD or JEPI to use those funds to reinvest into those or to those other companies, excuse me. So anyway, but all in all, I'm not trying to have a super big portfolio. Like 25 at most, I think is what 25 stocks at most is what I see myself ever having. And I'm probably speaking way too soon. I probably shouldn't even say that. But I overall, I don't really like the idea of having a super, super big portfolio. I like the idea of having higher conviction stocks. As I'm getting deeper into this, I like that idea of having higher conviction companies in my portfolio that I can build bigger positions in. And as I'm learning more about dividend investing and how all this stuff works, it's becoming easier for me to take those bigger positions. And I'm really trying to take more time and spend more time choosing the stocks that I'm adding to my portfolio, because otherwise I'm just going to run into situations like I did with AWR, where I'm buying for the wrong reasons and holding stocks for the wrong reasons. And over a long period of time, that's just not a good way to invest, I believe. So moving on to the next question from It's Chris. What do you think of Intel? I like Intel a lot. Let's actually go take a look at my Intel position. So I haven't been buying any recently. For a while, I was buying Intel every single week. You guys probably remember that. And I built up a pretty decent position in Intel. I'm up to almost $1,700 in this position right now. I have where are my shares? Almost 40 shares of Intel. And I am down quite a bit, down almost 16% in this position, which makes me think, guys, I might start contributing some more to Intel in the near future. Now that my Lowe's position is jumped up quite a bit, I feel okay maybe transitioning away from contributing to that. The same with Starbucks pretty soon, I think. And I wouldn't mind contributing some more to Intel. I'm actually kind of thinking about buying some more Verizon as well, bumping up my dividend yield a little bit more than where it's at. So anyway, moving on to the next question from Comic Book Athlete. You want less stocks to manage. What would be the ideal number of stocks in your portfolio? I don't know that there's a set number. Let me think about this actually. How exactly do I want to answer this? The ideal number of stocks, there is not a set number, but I will be content when I know that every stock, I will be content when I feel a strong amount of conviction for the ones that I have in my portfolio. Because admittedly, there are some positions that I'm having that I hold just because they are paying nice income, and I will say JEPI and XYLD are positions like that. And I don't plan on holding those forever. So you get rid of those, I'll have 21. Maybe someday I'll get rid of Main Street Capital and ORCC. That'll be 19. But I'm sure, between now and then I'll add some more to my portfolio. But I think if I could, to answer your question, like give you something tangible, if I could keep it around 20, maybe a couple more, a couple less, that would be great. That'd be perfect for me, I think. So Wallet Invest, moving on to Lowe's. Is Lowe's a good stock to buy at $195 per share? I think so. I started buying into the stock at just over $200 per share, like 201, 202, somewhere around there. And so, I don't mind buying it under $200 per share. I like that. I really liked it when it was in the low 180s, getting closer to 170. And being able to buy it there, it's actually helped me lower my average cost. I think it's now sitting at just under $200 per share, so that's awesome. So yeah, I like Lowe's at its current price right now. I like it under $200 per share. So, okay, let's keep moving on. Great question from Andy, who wants to know, what's a higher priority in your investing, stock growth or dividend growth? Dividend growth for sure. So, first and foremost, I'm buying these companies for the dividend income they pay. I like the idea of having that cash flow more than I do the capital appreciation. And the reason being, the capital appreciation is nice. And I do think that's important to have because it is an indicator of a business that continues to perform well and put up good numbers and continues to grow. So as a business continues to grow, as will its share price, right? Or at least that's how it should go over a long period of time. And so I more so like the idea of having the cash flow and not having to rely on someday selling my shares to fund the lifestyle. I'd rather just have money coming in from dividends on a monthly basis, on a quarterly basis. And I get a big advantage, or it's a big benefit being able to buy into dividend growth companies today, assuming that I won't be able to live off of this money for at least a couple more decades. It allows these companies who maybe have lower starting yields today to grow and compound and accumulate to establish a much higher yield on cost. Like Lowe's, for example, 2% yield or so, just above a 2% yield with near 20% dividend growth. Someday probably my yield on cost is going to be over 4%, maybe even 5% if it keeps growing, which is awesome. So anyway, and that's why like time in the market is such an important component to this investing stuff, and that's why you have to deploy a lot of patience, because it does take some time to see that come to fruition. So anyway, let's keep going, guys. Okay, Cookie Monster, good question. I'm thinking of selling Realty Income and using the profits to grow my position in Main Street Capital Corporation. Thoughts? You know what, man? I don't know. It's hard for me to say. I think I have both in my portfolio, and it's hard to compare them because they're in two different sectors, completely different sectors. So I will say this. There are pros and cons to both, right? Realty Income, it's got the lower starting dividend yield, but they have more dividend growth, and maybe are a more stable company than Main Street Capital is, or at least a little bit less speculative as far as dividend companies go, or dividend paying companies. But Main Street Capital Corporation, on the other hand, has a much higher starting yield. I think they have probably a 2% plus dividend yield advantage over Realty Income. So you're going to get a higher starting yield today. And so it's hard for me to say if you should sell out of one and buy into the other. I'd be curious to know why you're thinking of making that move. I think that'd be important to answering this question. So moving on, Danny wants to know, did he say what he sold yet? Yeah, man, I ended up selling AWR, American States Water Company. And I used those funds to reinvest into Lowe's. So that's what happened there. But yeah, go back to the beginning. I kind of went through it for about 10, 12 minutes or so. Yeah, some really good stuff. You didn't miss much. That's pretty much the gist of it. Okay, so Kevin, my good man Kevin. Ryan, you could turn off the drip on realty income and dedicate those dividends to something else. Yeah, you're right. And that's actually something I've thought about, Kevin. I've thought about completely turning off the drip, the dividend reinvestments in my portfolio, and just manually reinvesting those funds. I think now at this stage of the game, when I'm bringing in 130 something plus dollars in dividends on average, that might not be a bad move, because that's like an extra, every single month, that's like an extra week of contributions that I'm getting just paid in dividends, which is sweet. And I could put that money to good use, just buying and reinvesting into some of the more attractively valued positions in my portfolio. But I will say my one holdup with doing that is I'm afraid if I turn off the drip for all my companies, which I know I could be selective if I wanted to, but if I turned off the drip, there's some companies in my portfolio that I'm afraid I wouldn't contribute to very regularly, like Coca-Cola or Procter & Gamble, even Realty Income. I can't tell you the last time that I actually bought shares of Realty Income. And, I want to keep the growth going. I kind of like those positions growing on their own, growing by themselves when I'm not contributing to them on my own. It might be, I don't know, that might be a weird thought or a weird thing to reason with, but that's kind of how I've been thinking about it. So I don't know. I'm still chewing on the idea of turning drip off, but the more I think about it, the more I think I might want to. I'll keep you posted if I ended up doing that. Okay, let's see. Let me keep going. Find another question, guys. So Fenders says 30 plus regarding 3M. This is from earlier. 30,000 plus plaintiffs is the issue for the earplug suits. You're right. And how does that work? Like, do they end up paying out all of those plaintiffs, or is it a case by case thing? I'm not super familiar with how those type of lawsuits work, but I do know that 3M, that is one of their biggest things, and they're making these payouts like $72 million for one person, and if they're doing that across thousands of people, that cannot be a good thing for them. So is that even a possibility? Is something like that happening? Who knows? Sorry guys, I lost my. Every time, and I know I mentioned this before, but when I scroll down in the comments, I think as I'm scrolling down, sometimes it'll jump right to the bottom, so I need to scroll back up to see where I was at. So moving on to the next one, Yasin says, "Nice to see you live, Ryan." Hey, my friend, it's nice to see you here. Thank you so much for joining. So, okay, moving on. Roy says, "What are your thoughts on live streaming? Do you see yourself trying to focus more on it? Thanks for doing these. I enjoy them." Yeah, man. I really love doing these. It's just a nice laid back way to get some content out. And it's like I said earlier, it's fun hanging out with you guys and being able to chat and do this. And right now there's like almost 120 of us on this live stream, which is incredible. 120 plus people or 120 or so people just hanging out, talking dividend stocks and sipping on some margaritas. Which, by the way, I still have about that much left. So what do you guys say? We're almost at an hour. What do you say we keep it going a little bit longer? Maybe until I'm done with this margarita. I got to sip it a little bit faster though. But yeah, Roy, to answer your question, man, I love this live streaming thing. Honestly, if I could, I'd put out multiple ones per week, and I'd like to get to that point where I'm doing that. But realistically, I won't be able to maintain that just with my normal job and whatnot. But if and when I'm in a position where I'm able to make content and do this stuff full time, which someday, hopefully, I'll definitely be doing some more of this live streaming stuff. I think you guys will see a lot more content from me if I'm ever able to do this full time. Okay, Nate, good question, man. Really good question. Are you picking up any Disney? Do you think they will pay dividends again? And if so, do you think the dividend would be lower than it was before they suspended it? I don't know. I am not going to be buying into Disney. I don't know. I don't know. I don't know. Why wouldn't I buy into Disney? It's a great company, don't get me wrong. Obviously, a very iconic company, but yeah, I don't know. I don't see them paying the dividend again, at least in the near future. It sounds to me like they're trying to use those funds to grow Disney Plus a bit more, which is understandable. So, that's what they have going on right now, and I wouldn't consider adding it unless they brought the dividend back. And even if they did bring the dividend back, I don't know how confident I would be that they won't cut it again. So who knows, I guess is the best answer. But yeah, for now I have zero plans to pick up any Disney. My girlfriend has some Disney in her portfolio though. She's got a little position in Disney. And at some point I'd love to make a video just talking about her portfolio, because it's a nice portfolio. It would be a great portfolio for a lot of people who are just starting off with investing, who are just getting into it. So, okay, moving on. What's a good price to buy in Bank of America? That's a great question. So let's go over to the screen here. Take a look at Bank of America real quick. I don't think it's too bad right now from what I remember. So right now it's $36.15 per share, which is about almost 22% down year to date. Now, with banks, we don't really look so much to the PE ratio. We more so look at price to book. So let's go over to the valuation. Excuse me, guys. Seeking Alpha gives them a D+ grade. But I will say the price to book's not too bad, 1.15%, which is right in line with both the sector median and their 5-year average price to book. Now, okay, that's about average, which means they're priced about average right now. I wouldn't mind buying Bank of America at the price today. I think it's a pretty good buy, actually. The dividend yield's not too bad, 2.3%, 23% payout ratio, a super high 5-year growth rate. Geez, 23%. But a dividend growth history that's really lacking. I mean, only 1 year of growth with 22 consecutive payments. So it looks like they did suspend the growth during the pandemic and have since brought it back. So that's good. And then here, guys, they, right after the what is this? The Great Financial whatever it's called. I can never get the name of that right. Basically 2008, 2009. That's how I always refer to it. The Great Financial Crisis. I think that's what it's called, huh? After that, they cut their dividend to a really low. And for years, they kept it really low, just 1 cent, and started growing it back in 2014 there. So, I to answer your question, I don't mind Bank of America right now. I think it's a pretty good buy, which actually I probably should put my money where my mouth was. I've been talking about put my money where my mouth is. I've been talking about starting a position in Bank of America, but guys, I don't know if I want to start a new position right now. I just I have some things on my watch list, as you guys know, but I just don't know if I really actually want to add any positions. I think I just want to focus on the positions I have right now and keep rocking with those for a while. And actually this brings up something else I wanted to talk about. Truthfully, guys, I have not been doing much stock research lately. I've been, scrolling Seeking Alpha pretty much every day, just reading headlines, reading analyses, just reading news that's coming out. But it's more so been about stocks that are already in my portfolio, just keeping up with my current positions. I haven't been spending too much time, looking at new stocks, looking at new companies, the ones that are in my watch list I have. And if I'm talking about a particular company for a video, I will do some research, but I really haven't gotten into the weeds, deep into the weeds with an individual company for some time. I've kind of been, I guess, I don't know if taking a step back is the right word. I just haven't been spending as much time in researching company. I've just been doing other things, like trying to do more videos or put more energy into making videos and stuff like that. And I think that's a good and a bad thing. I think one of the good things about this style of investing is you don't always have to be looking for the next stock. It really is a set it and forget it style of investing, which I guess is why I feel okay not constantly researching stocks. But at the same time, just for what I'm trying to do with these videos, it is important to keep a pulse on what's going on in the market and keep a pulse on dividend stocks. And at the same time, I am trying to learn more and become a better investor, and that's only done with practice and repetition. So I guess I probably should get some more reps in researching stocks. But outside of this, guys, I've been listening to podcasts like it's going out of style, like it's nobody's business. Every morning I'll go out on my patio over there and cup of coffee, listen to some good podcasts, usually always investing podcasts, and I've been reading some books. I'm usually at any given time reading like 1 or 2 different investing books. I'm reading one up on Wall Street right now, about halfway through that. And what did I just finish? Oh, I'm also about halfway through Value Investing by Bruce Greenwald, but I don't know if I'm kind of putting that one on the back burner because that one reads like a textbook. So I've been doing other things to learn more about investing, but as far as researching companies, like considering adding them to my portfolio, haven't really been doing it. And it actually feels good. Like it feels good kind of chilling a little bit and working on working on the ones in my portfolio. And I'd be curious to know, like, do you guys ever go through phases like that too? Or are you constantly researching new stocks and looking for the next thing? How do you guys approach this stuff? I'd be curious to know in the live chat. Okay, let's keep moving. Okay. Zach, good question, man. Are you thinking of buying Best Buy, BBY? I think it's a great value around $85 per share. Yeah. I think it's a really good value right now. And Best Buy, I think I've been talking about that on the last couple live streams at least once. But Best Buy, kind of like Altria Group, is one of those just triple threat dividend stocks. Actually, we could call this one a grand slam because not only does Best Buy have the high yield, 4.4%, but they also have a low payout ratio, less than 34%, super high 5-year growth rate, over 20%, and a fairly respectable dividend growth history, 8 consecutive years. It's nothing like Altria Group, with 50 plus years of consecutive dividend growth, but not too shabby from Best Buy. And, I think it's a good company. As far as retail companies go, I don't know where Best Buy sits in comparison to other ones like Target or Walmart or Costco or stuff like that. Obviously, Best Buy is a lot more niched than those other companies I just mentioned. But I do think it has some really attractive dividend stats. I'm not considering adding it to my portfolio. It's one of those ones that I respect. Nice dividend stats, really nice dividend stats, and really attractive price right now too, I think. But it's one of those ones I'll just be watching from the sidelines. Yeah, like I said, there's a lot of opportunity on the market right now. It seems like there's a decent handful of discounted dividend stocks that one could start a new position in right now. And it's so tempting too, right? You guys know what I'm talking about. It's so tempting to want to continue to add stocks to your portfolio, but at the same time, it's like, I don't know. I don't want to say it's a dangerous game to play, but I think you keep doing that. Next thing you know, you're going to end up with 60 or 100 plus different stocks in your portfolio, and I'm not trying to do that personally. So no, I don't plan on adding any Best Buy, but I got some respect for it. I will say that, and I do think it is a decent investment, but it's not one that I want to add. Okay, Nick wants to know, I have a chunk of cash in a 401k rollover. Should I invest all at once or dollar cost average? You know what, man? It depends how much is a chunk of cash. It depends how much that is. But if it's a lot, if it's like, probably if it's considerably, nice 4 figures or even 5 figures, even 6 figures, I would dollar cost average. Yeah. And how much you dollar cost average and how quickly, there's so many ways to slice it. But yeah, dollar cost averaging is a good way to go. The only issue with dollar cost averaging is that you're not putting that cash to work immediately, which does suck. But it does help kind of level out the positions that you're buying into. So I think it's good in that regard for sure. So, okay, another good question, man. Have you decided on taking a little profits on Chevron? No, not concretely. No, but I don't think, just knowing me realistically, I probably won't. Never say never, but I just don't see it being in the cards for me. I'll probably just hold on to it. I think it's easier. I'm not trying to time things. And at the same time, if I was to sell some of that Chevron position, I wouldn't want to reinvest that money into anything else because I want to keep it in Chevron. I like the position that I have with Chevron, and I like the position I'm building. And I think selling, although I'll be locking in a lot of gains, because I'm up nearly 90%. I don't want to take steps backwards in my position there, and I don't want to keep cash on the side just to wait to reinvest back into Chevron when the time is right. That might be a smart move. I don't know, that might be a type of move that Warren would make or someone like that, but I don't know. I just think for me, it's easier just to keep it in. I'm in Chevron for a long time. I'll be in it for decades, so I don't mind hanging in there. But like I said, never say never. I could make another, I guess, snap decision, kind of like I did with AWR the other day, and end up selling some of that. Sorry, I lost my thought or position here in the comments. So let's see. Good question though, man. Good question. Keep asking me too, because I might change my mind. Oh gosh, Dividend Fire. Have you ever wanted to gamble and buy, for example, $1,000 worth of BABA or other speculative stock? Not really. if I'm gonna like invest $1,000, I'll probably just I'd put it into. If I was to go wild, like if I was like, okay, I have $1,000, let's play with it. Let's have some fun with this $1,000 and wanted to invest it. This is gonna sound silly, but I'd put it in like Procter and Gamble, and that'd be fun for me because Procter and Gamble, buying Procter and Gamble right now is kind of a no because it's at such a premium. So like taking an extra $1,000 and just kind of without care investing it into Procter and Gamble would be fun for me. That would be kind of how I would approach it. But no, I really don't have any interest in buying any stocks that are not dividend payers. And if I did, like I'd buy Google, I'd buy Spotify just because I'm big users of those, obviously. But otherwise, no, I'm pretty firm on sticking to this dividend investing strategy. I love it. I love investing in dividend stocks, guys. Absolutely love it. I like real estate too. It's just like real estate rentals, but dividend stocks, it's just so much easier, so much more hands off. Okay, guys, let's go. Couple more questions. Okay, Joseph, man. If you're still here, Joseph, I sold out of AWR and I reinvested into Lowe's. Yeah, okay, you guys got me in the live chats. I'll stop putting that on the screen because I know you guys got me in the live chat. Okay, gosh, guys. Luis, okay, this is a pretty good question. Okay, double down into Texas Instruments. Let's take a look at Texas Instruments real quick. What is the ticker symbol? TXN. I really liked, there's a period of time where I looked a little deeper into Texas Instruments. I remember really liking the financials. Okay, the PE is not too bad, just under 19. Okay, they're down 12% year to date. Okay, they've been doing a little zigzagging here too. Let's go to the dividends real quick. Okay, Seeking Alpha seems to like their dividends. Nice average yield. Payout ratio is right in the sweet spot, about 50%. Nice growth rate. Nice growth history, 16 consecutive years. 32 years of consecutive payments. Nice dividend history slope upward. Let's see. Let's just take a look at their financials real quick. Okay, decent growing revenue. Looks like 2020 they took a hit. 2019 and 2020 they did. Bouncing back up here in 2021, 2022. Profit looking nice. Let's see what their net income's doing. Okay. Trending upward over time. So, I don't know. I don't know if double down. I don't know if I would double down, but it seems like a good stock to buy right now. You might find, I don't know, let me know what you think. You might find a better price point as time goes on if you stay a little patient. Because they're in semiconductors, aren't they? Yeah, they are in semiconductors. Man, depending on how things play out with this semiconductor and supply chain issues, you might find a better price point for TXN. I don't know, man. Good question though. Okay, Amanda, yes, please stay a little longer. I got here a little late. Okay, just for you, man. We'll stay a little bit longer here. Guys, this is so funny. I really am having too much fun. I mean, the time just flies when we're doing this. Price to book isn't a percent. Did I say it? My bad if I said price to book is a percent. I know it's not a percent. Okay, let me keep going. Sorry, guys. Let me find another comment here. John wants to know, are short-term T-bills 4 or 8 week terms something you would even consider? That's a really good question. And I don't know because I don't know a lot about those. So probably not. Just, I'm trying to keep it simple. I would just stick to dividend stocks. I don't know, at least for now. If guys, there's so many other different ways one could invest, right? You can invest in growth stocks, in crypto, in real estate, in bonds, all these other things. But just for me with my limited budget, I don't know. And this is the same thing with options. I'm just really focused on dividend investing and building long positions in the companies in my portfolio and just building that up. If and when I'm generating a lot more money than I am today, a lot more income, then I would feel more. I'd be more willing to expand outside of dividend investing, but not right now. With the limited funds I have, I just want to maximize my efforts with this dividend investing stuff, if that makes sense. Okay. Okay, I don't know what that. Let's see, guys. Couple more comments to go through here, then we'll call it a night, okay? So let's see, guys. Do you know if I don't know? Okay. Do you know if it's possible to roll a SEP IRA positions into a Roth IRA? I don't know. I don't know. But let's Google it real quick, see what we can come up with. So Google SEP IRA to Roth IRA. Okay. Investopedia always comes in clutch. Can a simplified employee pension, a SEP IRA, be converted to a Roth? Yes, but you'll be subject to taxes like any Roth conversion. Okay, so I guess it's possible, and I don't know too much about Roth conversions, to be honest with you, so I don't know exactly what those tax implications are. Okay, so the taxes are paid up front. This means that you contribute after-tax earnings and get no immediate tax deduction, but you never owe taxes on that money again, meaning there are no taxes on the principal, earnings over the years, or withdrawals after the age of 59 and a half. Okay, so keep in mind that when you convert SEP to Roth, you owe taxes on the balance in that tax year. That's because the money you contributed to the SEP was done with after-tax dollars. When you roll the money over to a Roth account, it goes to an after-tax vehicle. This means you have to pay taxes on the contribution amount. Okay, that makes sense. Okay, guys. Aaron wants to know, did you pick up any Amazon stock? No, I didn't, man. I mean, you know me. I just kind of said this, guys. I'm just so focused on my dividend stocks right now. Not trying to buy anything that doesn't pay a dividend. I really do not. How do I say this? I really don't. It just doesn't interest me. Anything that doesn't pay a dividend, I'm just really not interested in it. I just love creating that cash flow. Just the idea of having those dividends coming in every single month without having to lift a finger, and knowing that if reinvested, that, like, knowing the potential of what that can turn into with just with time and consistency and patience, it's so exciting to me. And so I just want to keep doing more of that. Like I said, that might change someday down the road when I have more income, but that's not the case right now. Okay, guys, I think let's do one more. Let's do one more question. This is a really good one too. So, are you investing on margin? And if not, would you consider it? No. I've never invested on margin, and for what I'm doing, I don't know. I just don't know. I don't know why. I don't know what benefit it would be to me to buy on margin right now, and I'm kind of scared to be honest with you. I don't need that. I don't need that. I'm just good contributing my $150 a week and building out my position. So, yeah. Excuse me. So, guys, unless you guys have one more question for me, I'll take it. Or one more thing you want me to go over, totally down. But otherwise, I think that's pretty much it for tonight, guys. So this is our longest live stream to date. Okay, going on 1 hour and 20. Oh, one just came in. Okay, Ibrahim, this is the last one, my friend. Thank you so much for asking. What's the maximum number of questions? Guys, what's the maximum number of companies you should hold in a portfolio? For example, I know someone who has like 50 companies. This is a downside when it comes to diversification. Okay. This would actually be a really good question to make a full video out of, and I just might at some point. I don't think that there's a set maximum number of companies you should hold. Like, there's some people who probably have like 10, 15 positions or less and do just fine and take bigger positions in the companies they have. And then there's other people who have hundreds of positions. Like I was reading in One Up on Wall Street, Peter Lynch at one point in the Magellan Fund had, man, I feel like it was like 4 figures. I feel like it was over 1,000 different positions in the Magellan Fund, and so, which is a lot, crazy amount. And I could have that wrong, but it was definitely like well over 100 different stock positions in the Magellan Fund at one time. I think it was over 4 figures though. But me personally, like I said this earlier in the stream, but if I could keep it around 20, at least for now, I think that would be perfect. Somewhere around 20. Right now, I think I'm at 22 or 23. I don't remember off the top of my head, but that's a comfortable amount for me. But some people like more stocks. Some people like less stocks. When I first got into doing this investing stuff, I remember I bought a ton of different stocks. I think I had a much closer to 30 different positions in my portfolio at one time. And that was just too much. I realized that a lot of these positions were ones that I had that I didn't really know a lot about. And so, I think the more positions you have, unless you have a lot of time to do stock research, I think, you can, if you have a lot of positions, some of those will be ones you just don't have as much knowledge about. And I like as I'm learning more about this stuff, I like getting deeper into these stocks, and I like being able to learn more about them. And it's harder to do that if you're spread so thin across a higher quantity of stocks in your portfolio, which is one of the reasons I want to consolidate a little bit more. And, even talking about the stocks that are on my watch list, the ones I've kind of been talking about buying, those 3, Apple, Target, and Bank of America, I don't even know if I'll end up wanting to add those, just because I feel, especially even after removing AWR, I'm feeling pretty content with how many stocks are in my portfolio and kind of where that's headed. It feels good to get rid of some of those, I don't want to call them lower conviction ones, but being able to put more money into the higher conviction ones. And so that might be a trend I continue doing as well. We'll see when time goes on. But I do know if I were to take that approach and continue consolidating, some of the first ones to be cut are some of my highest dividend yielding positions in my portfolio, which would result in a pretty big hit in dividend income for me. But I can't think like that. I can't think, I'm losing out on some income today, because it's really not about today. It's you're investing today for the betterment of tomorrow. So it's really a long-term game, as you guys know. And with that, I think this is a pretty good place to wrap things up. But thank you guys so much for tuning in with me and hanging out for me this last, nearly hour and a half. We had over 100 people for a good majority of this live stream, which is very impressive. And I think so far this is the most amount of people we've had in the live stream. So thank you guys so much. As always, this has been a lot of fun hanging out with you all and chatting with you and seeing what's going on with you guys. And I look forward to seeing you in the next one. I think I'll let you guys know in the community. I'll put a community post about it, or I'll mention it in the Discord, which, by the way, if you're not in the Discord group yet, it's totally free to join. There's a link in the description of this video for you to join the live stream. Just click that. It'll take you right there. We have guys, we're coming up on 570 different investors in the Discord right now. So it's really growing. But either way, I'll mention it, what's going on in the Discord and in the community. It's either going to be, the next live stream is either going to be next Monday, same time, 5 p.m., or it's going to be next Friday at 5 p.m. I'm considering, for those of you who joined late, I'm considering switching the live streams to Fridays at 5 p.m. But yeah, I want to think about it a little bit more before I make any decisions. And until I decide anything conclusively, we'll keep rocking with Mondays. So, if you guys don't hear anything from me otherwise, plan on another live stream next Monday. This is the bad thing about live streaming. I always trip up over my words. This is the real me, guys. My brain moves 20 miles per hour faster than my mouth does. Oh, Cam is looking for Friday. Anyway, my brain moves 20 miles per hour faster than my mouth does, which is why I'm always tripping over my words. But anyway, guys, either next Monday or Friday. Either way, I look forward to seeing you guys then. And, here's to you guys. One more drink for you. My asset amigos, my dividend dogs, my cash flow captains, let's see if we can get one more. I don't know. I lost it. Anyway, guys, I hope you guys have a great night. Thank you so much for tuning in, and I will see you in the next one. Stay tuned for Wednesday's video. Got a great video coming out Wednesday at 8 a.m. And also, last thing, if you haven't done so already, please hit the thumbs up. Please hit the thumbs up and give this video a like. And also, if you're not subscribed to the channel and really enjoyed this and want to see more, please hit that subscribe button for me. That'd mean a lot. We're so close to 10K, guys. We are getting there. My initial goal was to be there by my birthday. Dividend dudes, yeah. My initial goal was to be at 10K by my birthday, which is July 21st, which means we have about a month and 3 weeks left to get there. I don't know if it'll happen or not. You know, I'm knocking on wood. I'm staying hopeful. I'm going to grind it out and you know, really keep my fingers crossed that it works out. If not, it's all good. But yeah, we'll hit that 10K either way. So, all right, my asset amigos, my dividend dudes, my cash flow connoisseurs, whatever else you guys want to call yourselves or whatever we're calling each other. I'll see you guys in the next one. And thank you guys once again. You guys are awesome.